Get ready for an epic earnings reveal. Next week, we're diving into the mind-blowing earnings of Tilray, McDonald's, PayPal, Roblox, and Starbucks. Trust me, you don't want to miss how these giants are changing the game in consumer confidence and financial innovation. McDonald's.
Alright, listen up. McDonald's is about to drop their earnings and it's gonna be juicier than their new burgers. Speaking of which, they've gone and revamped their entire menu like they're trying to win some culinary Oscar. Softer buns, onions on patties. What's next? Truffle-infused ketchup. But here's the kicker. They're pushing this summer of value thing harder than a used car salesman on commission. $5 meals, free fries, local deals. It's like they're begging us to supersize our arteries. Are we loving it? We'll find out if their cash registers are singing or sobbing. And let's not forget their fancy accelerating the arches plan. Sounds like something you'd hear in a Fast and Furious movie, doesn't it? 13 quarters of growth, but they still managed to fumble their earnings per share last time. It's like watching a high-stakes game of financial hot potato. So get ready, my fellow burger lovers and Wall Street warriors. Will Ronald McDonald be laughing all the way to the bank, or will he be drowning his sorrows in a vat of special sauce? Stay tuned.
PayPal. Listen up, you fintech fanatics. We've got a hot mess of digital dollars and corporate chaos coming our way next week. PayPal's about to drop its earnings report, and it's going to be wilder than Bitcoin on a Saturday night. First off, these guys crushed their last quarter like I crushed my morning espresso, but then they go and lowball their guidance. Come on, it's like scoring a touchdown and then fumbling the extra point. Wall Street's going to be watching this tighter than I watch my crypto cold wallet. Now, we've got this new CEO, Alex Chris, swinging his AI axe and trimming the fat off PayPal's workforce. He's talking big game about transformative growth. Well, buddy, let's see if you can transform those pink slips into green bills. Will the PayPal mafia approve? And don't get me started on that PE ratio. Are we looking at a bargain, or is this fintech giant about to faceplant harder than me attempting parkour? Strap in, hold on to your digital wallets, and let's see if PayPal can make it rain, or if it's going to need a GoFundMe to keep the lights on. Roblox. Ever heard of Roblox? Probably from that random kid on your block. But wait, Roblox is dropping their earnings, and if you're not paying attention, well, okay, boomer. First off, user growth. These guys were pulling in almost 60 million daily active users last quarter. That's like populating a country with nothing but Roblox addicts. If those numbers don't keep climbing, we might as well all go back to playing with sticks and rocks. Second, show me the money, baby. Bookings were closing in on a cool billion last time. If they can't keep squeezing more cash out of their blocky little empire, Wall Street's gonna throw a tantrum that'll make a toddler look zen. Lastly, they're trying to grow up, literally. Roblox is gunning for the big kids table, aiming at older users and going global. If they can't pull that off, they'll be stuck in digital diapers forever. Keep your eyes peeled, and maybe, just maybe, we'll all be rolling in Robux by this time next week, maybe even Rolexes, or we'll be crying into our pixelated pillows. Either way, it's gonna be one hell of a show. Starbucks. Lend me your ears, my fellow basic coffee junkies. Starbucks is about to drop its earnings report, and it's time to wake up and smell the overpriced espresso. Last quarter, a total venti-sized disaster. They missed the mark harder than a sleepy barista spelling names on cups. Now they're scrambling like a squirrel on a caffeine high to prove they can still brew up some profits. But hold on to your hipster hats, because Starbucks is pulling out all the stops. They're throwing around bonds like confetti, teaming up with Bank of America like it's prom night, and spreading stores across the globe faster than you can say triple shot macchiato. And oh, plot twist! Elliott Management's in the mix, probably itching to stir the pot and squeeze every last drop of value out of this coffee empire. Meanwhile, the app's buzzing, and night owls are flocking in like it's the only place open after dark. This earnings report is going to be hotter than a freshly steamed latte and twice as jittery. Will Starbucks serve up a comeback, or are we in for another bitter disappointment? Stay tuned, coffee fiends. Tilray.
Tilray, like the main American weed company, for those that didn't know, is about to drop their earnings. They've gone and bought a bunch of beer brands from Anheuser-Busch like they're playing some twisted game of alcoholic monopoly. Fifth largest craft beer company, more like the high five of the booze world. Weed-infused drinks are on its way, folks. But wait, there's more. They're pushing their Manitoba Harvest brand harder than a stoner raids a midnight snack cupboard. It's like they're trying to corner the market on munchies and buzz simultaneously. Now, let's talk numbers, because nothing says party like financial reports, right? Record revenue, debt reduction, and some fancy adjusted EBITDA target. It sounds like a strain name. But hold your horses on that free cash flow. Apparently, it's as delayed as your friend who says they'll be there in 5 minutes. And here's the kicker. They're all poised for the US market like a surfer waiting for the perfect wave. Federal legalization, it's the golden ticket they're praying for, harder than a gambler on his last chip. Will Tilray be rolling in green, or will they be left holding the roach? Tune in to find out if this cannabis contender is going to be smoking the competition.